Hi there, very good morning. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take all your stock-specific queries with our experts. And so keep sending your queries in. The number is flashing on your screen. Don't forget to mention your name, your stock's name, your holding time, holding price, and your holding time horizon. So yes, let's get started then. But before we get started with all the queries, here's a quick look at how the markets are shaping up at this juncture. All right, it's a very strong day coming in. 150 points of gains on the Nifty, inching very close to that 26,000 mark. If you talk about Sensex, that's also trading. Right. Sensex, so Nifty is trading close to that 25,960 mark, up 150 points from yesterday's close. If you talk about Nifty, stellar moves over there as well, more than 500 points of gains, 84,993. That's the level where Sensex is at, so very strong moves over there as well. Nifty Bank too trading above 100 points right now, 59,000. That's the level that it's managing to hold on to. If you talk about Nifty gainers, it's really the Pharma and Auto Pack that are leading the charts today. Starting with Max Health, that's up more than 2%. Reliance, on the other hand, that's also holding out very strong, nearly 2% higher. BEL, Tata Motors, PV, Infosys, all of these counters are trading in the green and are the top Nifty gainers today. However, some of the stocks they have sort of limited the upside for the Nifty. Shriram Finance, Hindalco, HCL Tech, they're all the top losers in trade today. If you talk about NSE advanced decline ratio, that continues to be in the favor of advances. So yes, good day of trade coming in, and it looks like Srishti, we are going to close in the green, and it's going to be a strong close for the week this time around.
Hopefully. Let's watch out for that, Kanishka, because off late markets have been giving very volatile moves. But with this, without further ado, let's get started with all your stock-related queries. And so many queries have already started trickling in as a part of our regular programming. But before we start taking those, let me welcome our expert on the show today. We are being joined by Avinash Gorakshikar to guide us fundamentally right now. A very good morning and thank you so much for our time. And Avinash, the first query that I have is coming in from V. Mathur from Delhi. He's a senior citizen and a long-term investor. He actually wants an advice on 3 counters. He's holding Jio Financials, 1600 in quantity at a price of 322 rupees. Tata Consumer is another counter with 300 stocks in his portfolio with a price of 1207, and TCS is the last one with a price of 3871 rupees. If you can help him in all the 3 counters, what will be your advice? Because I believe that in TCS specifically, he is sitting at a loss.
As far as TCS is concerned, I think he should look at averaging the stock. I think the stock has bottomed out at the current odd level, and I think yesterday's Accenture numbers have been quite encouraging. I think that clearly has sent a strong positive move across all the IT stocks, and I think hopefully once the India-US trade deal is signed, I think a lot of US related business deals are expected to flow to Indian companies. And TCS is one of the large front-runner IT companies which has got a large order book, a very strong balance sheet. So I think the time horizon for him, for TCS, should be at least the next 12 to 18 months. Hopefully, I believe the stock could be significantly re-rated. But if he averages at the current odd levels, he could bring down his price. And as far as Jio Finance is concerned, I think it's a long-term bet. The company has now gradually started entering the entire financial services basket. But the real impact of this is going to be felt over the next 12 to 18 months. So I think here also it is a long-term bet. In the short term, the stock will remain a volatile. But we expect that next year, that is FY27, should be a full financial year for the company with all its services playing out. So I think at the moment, here also, I think I would suggest him that he should hold on. And which was the third stock you mentioned?
Tata Consumers.
Tata Consumer also, I think my sense is that, see, it's a very large FMCG kind of player, has a very large product kind of bouquet. And I think the company has been well positioned as a premium player in the FMCG segment. So I think clearly if the investor can hold on for the next 12 to 18 months, the stock has risen and I think now valuations are fair to expensive. So in the near term, there are not any big short-term triggers, but he can hold on for the next 12 to 18 months where he can expect a reasonable risk reward.
So these look like long-term bets. Hi, Avinash. This is Kanishka also joining in. And let's go to some other queries as well. This is Bhardwaj writing from Coimbatore. He has 400 shares of LIC Housing Finance. The average buying price is 623 rupees. He's wanting to know whether he should add more at the current levels. He wants to hold the stock for a period of about 2 to 4 years. What would your suggestion be? Because the stock, of course, he's currently facing a loss. Do you think it's a good time to add an average a little bit? And, for the longer term, 2 to 4 years is the time horizon that he's looking at.
Yeah, he can definitely look at averaging the stocks. See, first of all, LIC Housing Finance is a company promoted by LIC. And most importantly, I think within the housing finance space, after the recent rate cuts and the upsurge in the rural demand, I think you're going to see a lot of uptick in housing finance activity. The second half is normally a busy period and a busy season period for banks and NBFCs and housing finance companies. So our sense is that second half should be significantly better than the first half, and hopefully FY27 should be a much better year. So he can average out at the current odd levels and take a time frame of at least 1.5 years. Once the uptrend in the housing finance sector starts, I think LIC housing should definitely do.
All right, so that's the take coming in on LIC Housing Finance. But Avinash, the next query is coming in on Vedanta, wherein Ignitis from Kolkata has bought 20 shares at a price of 570 rupees. Of late, we have also seen that demerger getting an approval as well. The stock was quite excited, but his buying price is very close to the current market price. Can he hold for the next 2 years?
Well, I think, Shristi, very soon, as the company has got NCLT approval for the demerger, my sense is that in the next 2 years, hopefully, we could see Vedanta getting split into 5 separate companies. So I think, if he's bought the stock at levels of 573, I would suggest that he should hold on. He could expect better value once the demerger happens, because a lot of these debt restructuring and a lot of growth potential will be seen across individual companies. And I think that is a good opportunity if he's willing enough to invest some time here. Keeping a time frame of at least next 12 to 18 months, I think he should hold on.
All right, so you should look at holding on to Vedanta. That's the long-term view and the fundamental view coming in on Vedanta. But let's move on. Kunal Bothra is also joining us on the technicals now. So let's get back to all the queries then and also have the technical views coming in. Now, this one is coming from our viewer Satya, who's bought shares of MGL at a price of 1490. He bought them at nearly 6 months ago. So he's facing a loss of about 26% or so is what he says. So he wants to know, should he exit this stock? What should he do? What's the option left for him now? Should he average or probably switch to Glenmark? What would you suggest? Kunal, first let's take a tech check and then we'll come to Avinash for a fundamental check as well.
Good morning. Thanks so much. So I think for MGL, I would actually believe that it's a stock which is into a downtrend, particularly. So my advice would be that to exit the stock over here and then maybe look out for some other names. Now, I think Glenmark Pharma could be a good option because of the fact that I believe that the Pharma index has started to look very attractive, much better than what it was poised in the last 2, 3 months, especially on the tariff news flow for pharma stocks. And Glenmark specifically, the stock has gone through a decent correction around the 2,200 plus levels in mid of 2025 towards sub 2,000 mark where the stock is trading right now. So price wise also is very attractive. I would suggest that it makes a lot of sense to switch from MGL towards names like Glenmark.
Okay, so that's the view on Glenmark as well. But Avinash, coming to you, what do you suggest? How is MGL looking from a long-term perspective? Of course, Satya has chosen a very different stock, like a very different sector if he wants to switch. What would you suggest? Which of these do you feel are better placed for the longer term? MGL or Glenmark? Should he switch?
No, I think my sense is, as Kunal was saying, MGL definitely, the previous 2 quarters have been very challenging. And I think going forward, the second half is also unlikely to be anything great. Typically, when crude prices are soft, you see CNG players, typically like MGL or, other players not doing that well. So our sense is that if the investor has got a time frame of 12 to 15 months, it's better to put your money on pharma companies. And within that, Glenmark and even Lupin look pretty interesting. In fact, we have been positive on both Glenmark as well as Lupin. Lupin has been a kind of a buy for us for a long time. The Q2 numbers were very strong, and Q3 and Q4 are going to be equally stronger. So I think within the pharma basket, these stocks look pretty attractive where you can make a switch.
All right, so that's the take coming in on Select 5.
there. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Srishti Sharma. This is a show where we are answering all your stock-specific queries with our experts. So let's go back to all the queries then. And we still have Avinash and Kunal with us to answer both fundamental and technical queries. So this one is coming from Satyaveni, who's writing to us from Hyderabad. He wants technical advice on two shares, Kunal. He's purchased BSE at a price of 28.90 and CDSL at 18.80. At what price can I average these two? That's the query that he's asking. What would you suggest?
Yeah, I think for CDSL, you can look to average it out, say closer to 1450 mark for the stock. That's where I would believe that maybe the near-term supports, the moving averages could align for the stock. For BSC, the fact that the stock has not gone through a major correction, except for the start of 2025, where the stock had corrected from 3000 levels to 2100, 200 marks. So except for that 30% correction, we've hardly seen any major correction for BSC. In case if the stock drifts down to say 2,500 levels, that's a good zone where you can look to average. Both of these stocks, they look very attractive in terms of the chart structure on the medium to long term time frame. But you just have to also take care of one important point is that both of these stocks are relatively high beta. So in case if there is any kind of a corrective wave, then these stocks can correct say almost 2x, 2.5x than the market or the overall benchmark indices. So that nature and the characteristic is something which you'll have to keep in mind. And based on that, you'll have to size your position. But then, as I mentioned, levels of 1450 and 2500 thereabouts for CDSL and BSE respectively is where you can look to average.
All right, that's the take coming in on BSE as well as CDSL. But next query is coming in from Ravi Nevaskar from Mumbai, Rajiv Nevaskar from Mumbai, I beg your pardon. And Avinash, he wants an advice that will it be appropriate or a good strategy to go ahead and sell L&T shares, because I believe he's already holding 100 of them in his portfolio, and rather invest that money in Shriram Finance. Of late, there has been news flow around Shriram Finance with respect to MUFG investments. So what's your take there? And would you also advise to shift from Bajaj Finance to Shriram Finance? What will be your view?
No, I think, Shrishti, there has been some corporate development in Shriram Finance, and that's the reason the stock has been in focus. But I think, it's better that both, the investor, hold on to Larsen and Toubro, because our sense is that the company is sitting on a very healthy order book. At least for the next 2 to 3 quarters, revenue visibility is pretty strong. And we don't know the entire contours of the deal, how this deal is going to actually impact the company in a significant way. So I think we'll like to wait for a quarter or so and then look at the kind of movement in the stock. So I think as of now, L&T seems to be quite well positioned at these levels. If the investor can hold on, I would not be surprised that he could see levels of 43 to 4400 over the next say 8 to 12 months. So L&T is a hold from our side.
L&T continues to be a hold, 42 to 4300. Those are the levels you could look at for a 12 to 18 months perspective. That's the view coming in. But moving on to our next query, Avinash, this is on the hotel space. The viewer is asking whether what's the long-term view on ITC hotels and Lemon Tree, which would be your preferred pick? How are the fundamentals looking like for both of these?
No, I think hotel sector continues to do well, and I think over the next say 2 years, I think you're going to see a good ramp up in both Lemon Tree as well as ITC Hotels. See, ITC Hotels is the second largest chain after the the Tata's, that is Indian Hotel. They operate not only in the middle but in the premium category of hotels, and I think average room prices have also started going up. This is the season now, October to March. So you could expect very decent and strong, robust numbers from both ITC as well as Lemon Tree. Lemon Tree is also expanding its room inventory quite significantly. But I think both these companies have to be looked upon from a slightly medium to long term angle. So over the next say 12, 18 months, if one were to invest, one could definitely expect a decent risk reward.
All right, so that's the take coming in on select hotel counters. But with this, now let's go and connect with one of our live callers on the show. And we have Vignesh on the phone line. Hi, Vignesh. Very good morning and good to be speaking with you. We do have Kunal and Avinash with us to guide you. Go on.
Yeah, very good morning. I've been following the show for long. I just wanted to know about Natco Pharma. I purchased it at 1130. I have more than 200 shares of it. I can hold it for next like 4 to 5 years. Just wanting to know if the recent hurt on the stock will last long.
That's about Natco Pharma. Kunal, his average price is 1133 odd rupees, holding more than 200 shares in his portfolio. What's your take on Natco Pharma? How is the setup looking like?
Yeah, I think it's an excellent chart. It's just that the stock has taken a lot of time in terms of a pause. I think if I'm not wrong, 2019-20 thereabouts is where the stock was at levels of 950 to 1000 mark, went up higher in the middle of it, and then we've now seen the correction back again to that 900ish levels for Natco Pharma. So it's grinded through a time-wise consolidation for more than the last 4 to 5 years. But then the only encouraging point which I can sense on the chart is that the stock is now showing signs of a breakout on the daily time frame, which means that there is a chance or a likelihood that the stock can come back into momentum. So it's undoubtedly one of the strong names in the pharma pack, a quality stock, but it's just that the stock has taken a pause for the last many years, thereby making a possibility that if you're a long-term investor, I think it's a very strong chance that the stock may come out of this consolidation and the breakout should be on the upside. So hold is what I would advise for Natco Pharma.
All right, so whole call coming for Natco Pharma within the pharma space. That's the view coming from Kunal. But time now for a very short breather on this show. We'll be right back with more of your queries to be answered on the other side.
Where we get you answers for all your stock related queries. We do have Kunal as well as Avinash with us to help you better. And moving on to the next query then, and this one is coming in from Archer from Madurai, writing to us from Tamil Nadu. He's a regular viewer of ET Now. Thank you so much, Archer, for that. But his query, Kunal, is coming in on RVNL. He's holding 700 shares at a price of 356 rupees. His question is quite straightforward. What's the possibility that it will reach 470 rupees? And what will be your advice, to hold on to this particular stock or to look out for some better opportunities?
So, I think the entry price for the stock is not very steep because the all-time high levels for RVNL was in the upwards of 440, 450 plus mark. Recently, the stock has gone through a major correction, I would say. More than a 30% to 40% correction already seen for RVNL from the previous major highs. In that context, I would actually believe that maybe I think sub that 300 levels could be a zone where the stock may start to look a little bit more attractive. There could be a chance that the stock may show signs of a bottoming out formation. But then I think since your buy price is not at a very, very extreme level, I think I would suggest a hold on RVNL. And there could be a scope that just around this 300 mark, the stock can form a near to medium term bottom and then get into a recovery phase. So thereby making it very closer to your cost price. And at that time, I think is where you can make a choice whether you want to hold on to the stock or you want to switch on to some other quality name. But as of now, I would suggest a hold on RVNL.
All right, so a whole call coming for RVNL from Kunal. Moving on to the next query. This is coming from Subramanian Padmanabhan, who's writing for us from Chennai, Avinash. They bought REC long time ago at a price of 105 rupees. So clearly their number has more than tripled this time around. But they want to know, should they accumulate more in their current portfolio for the longer term?
No, I think within the power distribution space, REC is a very well-established player, and I think has been consistently giving very good dividends. My sense is if the investor has a 2-year kind of time frame in mind, he can definitely add the stock on every decline. They could prefer to do an SIP year. Fundamentals of the company continue to remain good, and growth prospects also look pretty encouraging. So I think from a 2-year time span, they could opt for an SIP and accumulate gradually. But I think time frame has to be at least 18 to 24 months.
Right, so that's the take coming in on REC. But Kunal, the next query is coming in from Swati, and she's a long-term investor and wants your advice on two stocks. One of them is M&M Finance, the other one is Manappuram Finance. Would you advise to add these stocks or buy these stocks at current levels, or wait out for some dips? Any entry price point you wish to flag off?
Yeah, so first point is that whether you need to buy these stocks, I definitely think so. I sense that both M&M Finance as well as Manappuram Finance are on the verge of restarting their long-term cycles for themselves in terms of trends. That's one positive. The other part is that whether you need to buy the entire quantity at current levels, given the way the markets are, given the way many of the stocks have behaved, we've seen that after a phase of a decent rally for stocks, whether it's on a weekly basis or even on a monthly basis, these stocks have a tendency of going into a a mean reversion or a retracement of sorts. That's where I think you should try and take advantage of. So even in this case, M&M Finance as well as Manappuram Finance, I would suggest that you can look to buy into more staggered quantity. You can start looking at maybe 30%, 25% of your expected quantity at current levels for both of these names. And as you know, these stocks provide some decent retracements or corrections, that's where you can look to average in the further quantities. But buying on dips is what I would suggest for both of these names. But yeah, the structure for both of these stocks is positive on the medium to long term charts.
Okay, so positive structure and buy on dip strategy for M&M Financial. But let's move on and get our live caller on board. Mr. Akambaria is joining us from Hyderabad. Hi, sir. Thank you so much for joining us. Please tell us what is the stock that you are looking, you have a query on and want our experts to have that answered. Okay, I think we lost the call over there, but I believe we have their question. They've been holding 300 shares of Varun Beverages. They bought it at a price of 550 rupees. They bought it about a year back. They want to know whether they should continue to hold or add more and average at this juncture. Avinash, let me come to you first. Let's talk about the fundamentals of this company first, and then we'll come to Kunal for a tech check.
I think Varun Beverage is one of the largest beverage players in India and has got a very strong track record. In fact, the last year's performance was expected largely because there was an extended monsoon and summers were not so hot. So I think that was the reason the company could not do well. But typically, I believe, the coming year, hopefully one could see a hotter summer and I think beverages could be back in demand. They are one of the leading franchisee for Pepsi. They've also entered the snacking system, market, and abroad also they've got a very large network, especially from the African countries. So my sense is that the investor can actually average a little bit more. Longer term, the business is very sound. The promoters are well established, and the track record of the company are good. And the company continues to be held on by large marquee institutional investors. So I would believe that you have to give some time here. Over the next, say, 12 to 15 months, one could expect a reasonable risk reward from this stock.
All right, so you could expect a reasonable risk reward from a 12 to 15-month period over the long term because they have a strong business overseas as well. But Kunal, what about the tech check? What are charts suggesting? If you look at the past 6-month period, very modest gains, just about 4.5%. Do you think there's some upside due because they bought it at a slightly higher price?
Yeah, I would suggest so. In fact, my belief is that there could be a scope where Varun Beverages may even scale past about the 500 mark. The only concern over here is the time frame because I'm not sure if over the very near term, just over the next maybe a few weeks or in the next 1 or 2 months, the stock may see this kind of a revival. But it's because it's going through a grind. Now, many of these FMCG stocks, otherwise also I think are resetting or restarting their cycle on the upside. So in that context, yes, there could be a scope that going into 2026, many of these underperforming FMCG names like One Beverage, etc., they could go into a revival phase somehow, and your cost price and maybe you might get a level above the 500 mark also potentially for One Beverages. The only question is how much time the stock will take.
All right, so that's the take coming in on Varun Beverages. But with this time now, once again, to slip into a very short break, don't go anywhere. We will be coming back and taking more of your stock-related queries. Stay tuned. Welcome back to Buy Now Sell Now, and let's get once again get it going with your stock related queries. And the next query that I have is coming in on Marico. And Avinash, this query is from K. Narasimha Reddy, writing to us from Hyderabad. Is Marico good for long term? He's already holding actually 160 shares at a price of 627 rupees. What will be your advice here?
No, I think from a longer term perspective, Marico is a very steady performer from the FMCG pack. In fact, they have now entered the men's grooming segment also, and I think that is going to push and increase their market reach significantly. So my sense is that I think if the investor has a long term horizon, then I think he should hold on. He's already in the money. It's a well established company, a very well managed kind of product profile, and most importantly, they are known for their market innovations and their product marketing strategies. So I think one can hold on for the next 12-18 months, expect a decent upside from the stock.
Okay, so that's the view on Marico. Moving on to the next query then. This one is coming from Renuka Thomas. She's writing to us from Kerala. She wants to know, Kunal, whether she should buy Divi's Lab or Glenmark at the current levels. What would be your preferred pick?
It's a tough one to choose between both of them because both of these stocks are into a reselective mode. DB Slab, I think specifically at 6,450, 500, where the stock is trading right now. Glenmark Pharma also about the 1900, 1950 plus kind of a range. So both of these stocks are just about trying to establish their near-term support and trying to make a comeback. If possible, then I would suggest to allocate 50% each in both of these names in case if you want to look at either of the options, but very difficult to choose just one out of the two.
Right, but another query with respect to the healthcare, Kunal, is actually coming in from Shagmuga Sundaram, who is a senior citizen writing to us from Coimbatore. He's holding 80 shares of Apollo Hospitals, buy price is 7,500 rupees. Good time to average right now. He's looking for a one-year investment here.
Yeah, it's a good time to start averaging out Apollo Hospital because it looks like that the major corrective wave which was there for the stock price that seems to have now halted. The last 2 days, I think if I'm not wrong, 6,850 thereabouts has acted as a support for Apollo Hospital. The correction has also been decent. I think it's almost like a 10% plus correction for Apollo Hospital from the recent swing highs in the last month or so. So in that context, I believe yes, Apollo Hospital could be a good bet where you can look to average out further at current levels. But my only case over here is that whether you're looking at this as just a 6 months to 1 year time horizon, or if possible, can you look at this as a much higher term time frame horizon? Because there could be a possibility that the stock may go into a process of a bounce back, cool off, and then go into a sideways correction in the span of the next 1 year. But then if you're looking at this as a long term opportunity, then there is a very strong probability that the stock may restart or reset its cycle back again on the upside.
All right, so that's the view on Apollo Hospitals. Prefer taking a slightly longer term view. That's the word coming from Kunal. But Kunal, another query for you. K. Narayana Reddy, they are a retired bank manager writing to us from Warangal. They have nearly 150 shares of LTI Mindtree at a price of 5,600 is what they bought it at. So they want to know what's the short-term target looking like. They're sitting with a considerable amount of profit. What would you suggest, the next target that they should be looking at, say, from a 6-month perspective?
See, I think at current terms of 6,150 for LTI Mindtree, Indian Infotech Mindtree, I think it's a good time when you can look to book profits. Now, it's not as if that the charts for the IT stocks are looking weak, but it's just that I would sense that names like L&T Infotech Mindtree, which have run up much pre the larger cap IT names, they would go into a phase of price correction. The interesting bit is for L&T Infotech Mindtree that over the last 6-7 months broadly, the stock has taken multiple resistance at the 6,200 band, 6,200, 6,250 range. This time around also, I think if I'm not wrong, the last 2 days, 2 or 3 days, the stock has seen a very similar kind of a resistance and then a correction. So that's one of the reasons why I would suggest that it's a good time to book profits. But then in case if the stock goes into a correction and say broadly if it comes back to 5,700, 750 mark, that could be a starting point where you may look to start buying the stock back again.
All right, so that's the short-term view on LTI Mindtree, but let's move on and get another long-term query answered this time. Now, the viewer hasn't mentioned their name, but so therefore requesting our viewers to please mention their name so that we can attribute your queries to you. Now, this one is a longer term query. They've actually written their name. It's Sudha writing in. Their query is, which would be a better pick today, Sona BLW or HBL? Avinash, coming to you, they are looking to invest for a long-term perspective and they want to start today. What do you think is the correct price, Sona BLW and HBL?
I think both the companies have got their own growth strategies well mapped. In fact, as far as HBL is concerned, I think it's a play where they are going to benefit by the Kavach program. HBL Engineering or HPL Electric? What is the company? If you can please tell me.
Mentioned, but let's go with HPL Engineering.
Okay. So HBL Engineering is one of those companies where the customer profile is largely defense, railways as well as aerospace. In fact, HBL is one of those companies which has benefited significantly from the Kavach program. It's one of the few vendors which has been approved by the Ministry of Railways. So my sense is that if you've got a 2-year kind of time horizon, HBL can be a good bet, considering the fact that FY27 and 28 are going to be very strong years. They're already sitting on an order book of roughly about 3.5 to 4,000 crores. So this stock can definitely be a good long-term investment at the current oil levels.
Okay, so that's the view on both of these counters. But moving on, here's another query. This one is on NIIT. They have they've bought the stock at a price of 154, and they also have Tata Motors, nearly 900 shares at a price of 90. Kunal, they want to know whether they should book their profits or invest in some other stock currently. What would your view be? NIIT and Tata Motors.
I would suggest that it's a stock which is very very volatile. I think if I'm not wrong, the recent price for the stock is at 86 or 87 rupees thereabout, and it's been just about consistently sliding or going through a correction. So it's a bit risky stock. I would suggest to exit this name. But then I think Tata Motors is something which I would suggest to hold on to, because it looks like that both Tata Motors PV as well as CV are going through a phase where the supports are stronger. The demand is getting a little bit more stronger for these stocks compared to their peers. So I would suggest that you should look to hold Tata Motors at current levels and not look to sell, even though you are in profits. Because my belief is that if in case the cycle resets itself for Tata Motors, it can play a very strong catch up with respect to many of the other peers in the auto pack. So I will suggest a hold on Tata Motors.
Okay, so a whole call on Tata Motors, whereas NIIT, that looks like a little volatile right now. That was the last query of the day. Thank you so much, Avinash and Kunal, for joining us and answering all of the queries from a fundamental as well as a technical perspective. On that note, we'll let you go. Well, with that, time now to put the spotlight on the auto